Ardana and why it's one of the top coins on the Cardano blockchain, in my opinion. Today, we're going to do a value investing approach about how I've come to this conclusion, why I like Ardana, what I like about it, and you can decide if you think the same thing. All right. So, as always, if you are new to the channel, we do a lot of crypto value investing. We do coin reviews, Reddit reviews, TA analysis reviews, overall market conditions, crypto conditions, US and global economy conditions. I do a lot of cool Reddit stuff in my shorts. So if you haven't seen those, watch those. As always, we're here to have a ton of fun. Crypto to me is a ton of fun. And I know I have money in the game, and a lot of people have money in the game, but I think it's best to approach it from a place of having a lot of fun. And when you have a lot of fun in something, you're going to pay attention to it more. You're going to be more active, have better outcomes and experiences. Just like in the gym, you have more fun at the gym, you go to the gym more, you get more muscle, you get stronger, right? Without even really trying. Same thing applies to crypto, same thing applies to investing. Okay. So, as always, this is just kind of my opinions, my theories, my strategies, what I'm doing, just giving you an inside look into my portfolio and my hedge fund, and this is not financial advice. You need to make your own decisions, your own due diligence. Take kind of what I'm saying and let those gears turn in your head so that you can kind of apply what my strategies and what I think to your own strategies and what you think. Okay. So let's touch back, just cover the basis of my theory on how I invest in crypto. I also do this I invest in the S&P 500, and I do that just because I believe the S&P 500 will be around for the next 20 years, and I would like to retire. So that's kind of my guaranteed retirement. All right. So value investing in crypto is a pretty kind of like newer thing that I've been trying to work on, and basically what it is we look at cryptos, we look and see if they're undervalued or fairly priced based on the current market conditions, and then we kind of try and assess a future value and decide, is that level of return worth the risk of crypto going to zero or losing your seed phrase and all the risks that come with crypto, right? So is the value of purchasing a crypto worth the inherent risk of losing that crypto and losing your investment, right? Same thing applies to stocks, same thing applies to real estate. If you want to buy a house in Miami, you have to have the inherent risk of, a hurricane destroying your house in Miami, right? And if it doesn't destroy your house in Miami, you have to budget for the insurance cost for flooding and all that stuff. So it's just extra costs. Same thing applies here. Crypto, it's a little different. We don't have bank regulation and stuff. So it's, you're taking the inherent risk of investing in crypto, and that risk should be determined based on, the value should be worth the risk, right? So I'm not going to bore you with the Bitcoin ETH talk today and like a bunch of other chains. Today we're only going to focus on Cardano. So on Cardano, if you go to coinmarketcap.com, there's a list of all the projects on Cardano currently building, currently active, ready to go. And on that list, you can see one of the projects called Ardana. Their ticker is Dana, D-A-N-A, and that is my go-to project for this bear market, my low cap pick. I am not diversified across low caps. I have a couple Cardano low caps that I'm invested in, and that one is my biggest holding. So the way that I came to this project is I follow kind of like, I call it like a niching down system, niched down value investing in the crypto market. And so when I started looking into projects, I didn't know about Ardana. I didn't know about the projects on Cardano. What I simply did when I first started like building a strategy in crypto is I just picked one chain, and I watched this video from Alex Becker kind of talking about this, but I picked one chain. Cardano was the one I chose, and I went all in on that chain for 3 to 6 months, just learning, researching, investing a little, losing a little, exploring all the projects, the functionality of everything, and kind of deciding what I like. I've lost some money doing that. I've gained some money, and I have some NFTs. It's just they're not really doing anything, but I have some NFTs, and so I've tried different DEXs, and I know which ones I like now, and I've tried different wallets. I know which ones I like, and so based on that, you know, uh, back half of last year, I've the past 6 months just been playing with the whole ecosystem. And at the end of that 6 months, I've decided I still like the ecosystem, and I was ready to, based on the gathered knowledge of all the projects and weighing the values of each project against each other, Ardana is my favorite. And here's how I came to that decision. So if you're looking to feel free to go look at Ardana. It's up to you if you want to invest or not, but I personally like it. So why did I come to the decision that Ardana is the main low cap coin on the Cardano blockchain that I am currently investing in during the bear market? There's a bunch of reasons. So reason number one is their niche use case. Okay, Ardana is a stable coin hub. They also have their own stable coin, DUSD. They have foreign exchange of stable coins within their stablecoin DEX. So they have DUSD, DEuro, and DGBP. And then they also have, like, if you take ADA or Cardano native assets and you put it into a vault on their platform, they'll mint DUSD to you. So it's kind of like collateralized loan and lending in a sense on their DEX, right? Their decentralized exchange. So that right there is just a great host of features that if they can pull all that off, that is going to be, and the UI UX looks good, that is going to be a game changer for Cardano, in my opinion. Here's why. Okay, so they have a great niche use case. The second thing, that niche use case is usable right now, right? So I talk about this a lot. There's like, everyone's always kind of like looking around like, oh, this project's making the YouTube of Web3. This project's making the Instagram of Web3. I think those are niche use cases, yes, but I do not think that those niche use cases are usable now in this bear market, next bull market. I do not, right? So as like you can think about it like as technology was evolving, the first thing was not social media, right? And I think YouTube, Instagram, Facebook, they have too much hold on the social media game. No, people are not just going to transition to something like that on Web3 just because it's on Web3, right? So Ardana being a stablecoin DEX hub with lending, borrowing, I mean, they don't have staking. It's like, you lock your Dana in a vault and you get EX Dana and you get like multiplied rewards for supporting the liquidity and all that. They have liquidity and all that. So they um they just have a niche use case that I appreciate and I think is important for Cardano. Then they also have a niche use case that is readily what the DeFi ecosystem is looking for right now. Okay, so they have a niche use case. That niche use case is usable and desired right now. Okay, and then the third thing, it's like part of number two, but Cardano does not currently have a Cardano native stable coin. All right. So the official Cardano stablecoin is JED from Cody, the project Cody, but they have not released that stablecoin yet. So if Ardana can come out and put out their stablecoin, back half of this year, they're quoting Q4 or Q1 2023, Q4 2022, Q1 2023. But if they can put out a DEX with a stablecoin and stablecoin hub by the end of this year, that's a game changer for me. I use the Cardano ecosystem and I would love a place that I can move my Cardano native assets into a stablecoin if I make millions of dollars, right? I mean, the fact that we don't have a stablecoin means that we just move Cardano native assets into ADA, right? So a stablecoin would be great. That's the first part. The second part about Ardana is their team communication. Okay. So with all the projects I enjoy, I follow their Twitter, follow their Reddit, and Ardana has weekly community calls. They've had some feedback from the community about their their stake pool, like staking reward release of Dana, how it's too low, and then they raise that. So I see these things as like, one, they're engaging with the community. Two, they're engaging with the community about things the community doesn't like. Three, they're adapting to what the community wants. This ties into decentralization and governance really, really well, right? So I see them actively giving us the information we need if you're willing to look for that information. Then I also see them willing to adapt the protocol as people say within reason. And then I also see them willing to let us in on the technical and non-technical aspects behind closed doors. Okay. All those things are big green flags to me. The next thing I would say is that I like the tokenomics as well. They have a good split I don't remember the exact numbers right now, but it's on the website. You can go look at it. It seems pretty fair to me. I know like 50% is going to liquidity rewards. So if you just, and then like 20% is either like 12 or 20% was privately sold, and like the other was publicly sold, and then like 15% for the team. It's like fairly good decentralized tokenomic numbers. But if you just buy a little Dana or have some Cardano native assets, once the DEX is live, you can just provide liquidity, and there's 50 million Dana waiting to be distributed to people. So it's a great number when the total supply of Dana is 125 million, right? So it's like 40 or 50%. Now, so we have all those great things going for it, great niche use case, great reason for it to be an applicable project. And then the founder of Ardana is also founding a second project, Orbis, which is a ZK Snark layer 2 rollup solution for Cardano. So, this team is building Ardana, and they're doing a great job, in my opinion, on the previous things we mentioned. But not only that, but they have another cutting edge solution for Cardano that we need. And the thing about this, about Ardana and about their other ZK Snark project, is these are projects that are prevalent on Ethereums and Atoms and Algorands, right? That have booming DeFi ecosystems. Cardano does have a good DeFi ecosystem, but I do think we have a ways to catch up to an Ethereum, right? Last bull market, we were top 3, right? But we do not have a top 3 DeFi ecosystem in comparison to Ethereum. Like, we have a lot of ground to cover. So I think with projects like this that are already available on Ethereum, basically we're just building that infrastructure on Cardano. That is an important thing. We can't have the YouTube of Web3 on Cardano if we don't have the DeFi infrastructure in place on Cardano first, right? So those are a ton of reasons as to why I think, Ardana is a fantastic project to be watching / accumulating in this bear market. That's exactly what I'm doing, right? So those are kind of the main value-based, non-tangible reasons that I personally am invested in the project, right? And then, if like Q4 the DEX doesn't come out, or Q1 the DEX doesn't come out, I'm gonna have to take a step back and be like, okay, have I made the right decision? Or if the DEX comes out and the UX, the user interface, is just terrible, I'm gonna have to take a step back and be like, well, did I make the right decision, right? But we're not there yet, so I'm investing off of intrinsic value, right? Non-tangible value. And so I talk about non-tangible value. It's something, I forgot the name of the hedge fund, but they're a crypto-based hedge fund. My brother sent me this link, and they talk a lot about non-tangible value and how over time, since say if you start in the 50s, from the 50s to like 2050, assets and companies and things are becoming less tangible, more intrinsic. So if you were investing in the 50s, maybe you were investing in Walt Disney. It's literally a park you go to. Or you're investing in Coke. You buy Coke bottles, right? Or you're investing in Bank of America. It's a bank. Back then we were on the gold standard. Everything is like physical. There's inventory. You're buying what you see, basically. Fast forward to the 2000s, we have the dot-com era, and now you're investing in AOL, you're investing in Yahoo, you're investing in Google. You cannot see a search engine. You cannot hold a search engine, right? You cannot hold digital mail, right? It's becoming more intrinsic in nature. So, in my opinion, it's like, as things move more intrinsic, as money is moving more intrinsic to where we do not hold money, but digitally we have money via credit cards and Apple Pay and Stripe and all these things. Now we're moving to crypto. It's like, as these assets become less tangible, your value-based investing can also become less tangible, right? So I'm sure people have a hard time struggling, or would struggle, if I mentioned that value investing in crypto is more about like tokenomics and how the community is and how the project is, and like how is the developer reports and like the GitHub and like all these things. But that's the truth. That's what we actually do. There's no financial reports. There's no regulation. There's no inventory with a blockchain project. I mean, they have a max supply, but I mean, what are they going to inventory? Like the computers they use to code the stable coins, right? It's just there is none of that. So we have to build new methods of being value-based investors. We have to build. Warren Buffett and Benjamin Graham and Charlie Munger built their own methods and theories of value-based investing, and people have been using it for the past, 50, 70 years. Now I'm trying to apply that into the new non-tangible version of crypto value-based investing based on principles that they said, and that's how I've applied it to, crypto, Cardano, Ethereum, Bitcoin, and Ardana. All right. So the other reason why I'm investing into Ardana, and when I invest, like my portfolio is pretty small. I probably have less than 10 cryptos total, probably like 5, 6, 7. But I do not, I follow Warren Buffett's advice of letting your winners ride and to not sit on the sidelines and lose because of omission. Warren Buffett says he would rather lose by commission, so that means buying something and it losing value, than to lose by omission, which means you lost because you never even got in, right? I've done my due diligence, I've done my value investing research on Ardana, and I will not lose on this opportunity by not investing. I am 100% perfectly okay if my Ardana investment goes to zero because one, I'm having a ton of fun in crypto, and two, I believe in it based on all the reasons I've told you, right? So because of that, and because it fits into my value-based crypto investment theory of like non-tangible value things, I'm okay with my Ardana investment going to zero. Now let's get to the upside. Ardana is currently trading at a $5 million market cap, $20 million fully diluted market cap, and it's trading at about 18 cents. If you look at the equivalent projects on Ethereum, so I would assume that would be like a Curve DAO, an Aave, a Maker DAO, like Maker, stuff like that. If you pair Ardana to those projects, you are looking at a potential 1000x return. And that's very hard to like, for me, the risk to reward ratio is very hard to pass up. It's very hard to not invest. After I've done my due diligence, I've done my value-based research, and I've been sitting here for 3 to 6 months, paying attention and watching. It's hard for me to not invest. So that's why I invest. I would rather lose, say I put $1,000 into Ardana with the off chance it can go to $1 million. No, I'm not. I will be okay if that $1,000 goes to zero. Okay, that's how I think about it. So with those Ethereum projects right now, like Curve DAO is probably like 600 million. Aave is probably sitting at $1 billion market cap in the bear market, stuff like that. And then in the bull run, they might get up, like Aave might have been like 5 to 10 billion. Curve DAO might have been like 1 billion or something like that, right? So on average, you could say that projects like this in the bear market on Ethereum, the biggest smart contract platform, are probably on average, 500 million plus, right? So in the next bull market, somewhere between 2024, 2025, my low end price target for the market cap of Ardana is 500 million market cap. Now, Ardana is currently trading at 18 cents at a $5 million market cap, 20 million diluted. So if Ardana can go from here to a $500 million market cap in the next bull run, that will be at least 100x return. Every $1,000 you put in will be worth $100,000. Okay. And that's on the low end. If it does some great things, some great things, and it can match more of like an Aave standard in a bull market, you could probably get closer to the 1000x return, somewhere between 100x and 1000x return. That is why I'm not sitting on the sideline for Ardana. I do recognize it is a risky project, a risky asset. A lot can go wrong. Their DEX is not live yet. They don't have the project live yet, but I think these are important things for you to know if you're watching this video. If you're watching this video, hopefully you have taken some of the things that I've been trying to promote to people as value-based investment theories in crypto, non-intrinsic value, stuff like that, or non-tangible value, more intrinsic-based valuations, and really kind of found like your area of crypto. So I hope this kind of like put some gears in your head that you can think about to be like, okay, what am I investing in? How do I niche down? How do I learn deeply about the project? And, you know, how do I make that gut decision? Because every investment has a gut decision. Okay. You can only do so much due diligence, so much research. Every investment's going to have a gut decision. I've done the research on Ardana. I've put the time in on Ardana. I have sat on the sidelines. I've been paying attention and I will continue to pay attention and reassess my Ardana valuation. But I'm currently valuing Ardana at, I think it can be anywhere between like 20 and $200 in the next bull market. And it's currently trading at 18 cents. So that would be 100x minimum from here. That is truly what I believe, and those are the reasons why. I really hope, if you're an Ardana investor or looking to get into their Cardano ecosystem, that just kind of raised some eyes for you. Even if you don't invest in Cardano or Ardana, maybe you invest in Ethereum-based projects or gaming. I hope that the way that I think about these things has kind of opened your eyes. Maybe you can take some of those methods and think about these things in your own way. Maybe put some of my thoughts and my investment, like the way that my mind works about the value-based theories, maybe that can apply to you. As always, I just try and have a lot of fun in crypto. That's why I have the YouTube channel. That's why, I'm on Reddit. I just like to talk about crypto, have a lot of fun with crypto. If we lose the money, it's okay. Don't invest more than you can lose. As always, my intention is not financial advice. These are just my opinions. And but I do think it's worth for you to take a look at Ardana. Just give it a look on CoinMarketCap, see if you like what you see. Other than that, I hope everyone has a great day, great next week, great weekend, and I'll see you in the next one. Thanks.